In this video, my goal is to give you some valuable information about how the pre-approval process works, how you should go about getting pre-approved, and I want to talk about a trend in my industry that I think is very bad for consumers.
Get pre-approved in 15 minutes in your underwear using our artificial intelligence, blockchain, machine learning, biosensor technology that's going to pre-approve you for a loan without having to even talk to a person.
Now, before I go into detail on what exactly bothers me about this type of messaging and some of the technology behind it, let's go back to basics on pre-approval and just cover the basic definition. A pre-approval is a letter from a lender that says you will very likely be approved up to a certain purchase price, up to a certain loan amount to purchase a home. You will need this letter when it comes time to submit your offer because sellers will not take you seriously if your offer is not accompanied by a pre-approval letter. Throughout all of the articles that I read about pre-approval and preparing to make this video, I noticed a strong emphasis on that last part. To me, this emphasis kind of covers up the real value of what the pre-approval process should bring to you as the consumer. That value, beyond unlocking your ability to put a contract on a property, is the knowledge and the confidence that you have an accurate assessment as to your ability to qualify for a home loan. And not only that you're fully aware of all of your options. You know the price range that you should be looking at based on your budget. Overall, you have gone through a process that has armed you with information that will put you in a position to make the best financial decisions for you and your family, with an emphasis on your overall financial strength and well-being. Before you get into the car to even look at homes, before you start shelling out money on home inspections and an appraisal, before you and your family get so excited that you're arguing over who gets what bedroom, you need to know that the loan is going to be in place, and you need to know that the payment you're going to take on is going to be affordable. Now, as far as technology goes, I want to be abundantly clear. I am not opposed to any technology that can reduce friction in the mortgage process. But I kind of compare some of the marketing that I see from other mortgage companies to the general tendency of Silicon Valley to, from time to time, kind of needlessly reinvent the world around us. If they can transform something old and boring into something new and technological, they can sell a lot of products and make a lot of money. I'm reminded of a product called the Juicero or Juicero. I'm not really sure where to put the emphasis. This was essentially a $600 thing that squeezed space bags of stuff into juice. And as silly as that sounds, if you were to look at the advertisements as I did back in the day, they kind of got your heart pumping a little bit. This wasn't just juice, this was juice. But how the story ended is, well, it didn't really take too long for people to figure out that you could just take these space bags full of stuff and just kind of squeeze them with your hands in the same way that technology was used to overhype something to get people to really think about replacing their juicer. The mortgage industry has oversold, overhyped, and overpromised regarding the technological innovations that have happened to make the mortgage process easier. But just as in the case of the Silicon Valley Juice Company, the marketing hype juice here isn't really worth the squeeze. If we take a look at these marketing messages coming from the mortgage companies promoting this kind of do-it-yourself mortgage from your couch in your underwear, really what they're trying to overcome is actually a very legitimate complaint that many mortgage consumers have. You see, we in the industry know that, you're probably not looking forward to picking up the phone and providing your personal financial details to some salesperson. And I get this. I really, really get it. And when I hear these mortgage advertisements, there is a part of me that says, yeah, cut those guys out. But what I also think about is something's being left out here. Maybe mortgage companies should focus on the root problem, which is the quality of their salespeople. And maybe we call them salespeople because they focus on selling, not on consulting. It turns out it's much easier and perhaps more profitable to take this really valid consumer objection to talking to a salesperson and telling the consumer, hey, with us, you don't have to. And the best part, from the mortgage company's point of view, is that they're going to take you, the consumer, and turn you into the frontline data entry specialist. From the consumer point of view, I see two huge problems with this. Number one, the sheer complexity of the guidelines and practices from the big mortgage agencies like Fannie Mae, Freddie Mac, FHA, etc., it's impossible for me to overstate how complicated all of that really is. Even the most sophisticated consumer that spends a lot of time in the application to try to get it perfect, there is just going to be a chance of a serious error in translation between the world of a normal, logical thinking person and the mortgage process. I tell people all the time that one of my main jobs is to act as a translator between these worlds. Number two, the mortgage companies that promote these online do-it-yourself mortgage options, they actually know about problem number one. And what they also know is that if they turn in closed mortgage loans for purchase by one of these big mortgage agencies, that errors made on the front end that were not caught and corrected before delivery, that is going to bite them in the butt. So given that the people running these companies are smart people and they know the consequences of turning over bad loan files to the agencies, well, they're really just going to tap you on the shoulder. Hey, you've actually got to call Bob or Susie to go over a few things. You have potentially already submitted your credit card information. It's entirely possible that they've already collected an application deposit, which may be non-refundable. So what is sold to you as the consumer, as this kind of passive do-it-yourself mortgage process, is really only that at the beginning stages of the process. And the funny thing about that to me is that that's really the stage that I spend the most time with my clients. And the reason I spend so much time with consumers at the front end of the process is because the mortgage process really does fall under that old coder edict of garbage in, garbage out. It is ultimately my job, my responsibility to take your information, translate it into the world of mortgage guidelines, and make certain that what we're putting into the system is going to come out the other side as an approved closed loan. What these supposed do-it-yourself mortgage platforms do, they try to replace the expertise, experience, and knowledge of a loan officer with AI robots. And while I certainly think it's possible that at some point in time in the future, my expertise can adequately be replaced with said AI robots, that day is not today. What I'd like to do now is turn this around and talk with you about how I approach the pre-approval process in a way that I think is the most beneficial way for my clients. As I said before, I don't have any problem with using technology to make this process easier. Fact is, many of my clients do use the online application up front. But whether you apply online or you call me up front and we do the application that way, we are going to have a conversation. Because the pre-approval is not as simple as fields on a form. You can ask questions. I can answer them. We can have a back and forth exchange to make sure that you understand all the different moving parts involved. The pre-approval can really be boiled down to three key aspects: debt to income, credit, and assets. I list them in that order because really the first question that I ask during any pre-approval consultation is, how much can you comfortably afford per month, including the taxes, insurance, etc., the whole payment? Where are you going to be comfortable? Once we establish whatever that number is, I can get to work determining what price point you should be at as you search for properties. Now, the calculation involved in the debt to income ratio, I've got a very comprehensive video on that process you can see here, but for now I'm going to boil it down to its key components. Number one, the debt to income ratio actually starts with making sure we understand your income. For someone that has a simple salary, that ends up being a very simple calculation. We take that yearly salary, we divide by 12, that's the monthly figure that we use in the calculation. But if you have hourly wages, if you have overtime, if you have commissions, if you have bonus, if you work more than one job, if you have business interests, if you're fully self-employed, all of these things make coming up with that qualified income total a much more complicated affair than you might believe. Once I have confidently calculated your qualified income, then it's a matter of resolving the debt side of the equation. Where we're going to start there is we're going to take that monthly payment comfort range. We're going to add any monthly debt expenses that appear on the credit report. As simple as that sounds, there are plenty of cases where it's not that simple. And again, being able to rely on my experience and expertise is vitally important to ensure the accuracy of the debt portion of the debt to income ratio calculation. Finally, we add up all of those monthly debts and we simply divide that total into your monthly gross income figure. The figure that comes out the other side, that is your debt to income ratio. Once we have that DTI number, I'm going to be able to determine what doors are open to you in terms of programs. The next factor that we're going to look at in pre-approval is your credit score. For the purposes of your mortgage pre-approval, what you need to know is that we pull what's called a tri-merged credit report. This is with Equifax, TransUnion, and Experian. Regardless of where that score lands, what it's going to tell us are what doors are open to you in terms of programs. The higher your credit score, the more programs are going to be on the table, and overall, the cheaper those mortgage programs are going to tend to be. Finally, when we're going through the asset portion of the pre-approval application, I'm going to lead with a question that's similar to what I asked up front in forming the debt to income ratio. And that question is, based on the amount of money you have right now, what can you comfortably come up with for your down payments? From a technical standpoint, what we need to validate as it relates to assets is that you have sufficient funds to cover whatever down payment you're doing, plus the closing costs. Plus, there are some programs that require that we document that you have some funds left over in reserves. While this may sound very simple, we're going to look at a bank statement, we're going to see, okay, you've got all the money in place. This can end up being much more complicated. What we're required to do is look at the past 60 days of activity on all of your asset accounts that are contributing funds toward your transaction. The mortgage guidelines passed down to us from the mortgage agencies, they require us to analyze this 60-day period and determine if there's any money that has come into your accounts that might have come from a third party. And if so, we need to figure out who this third party is, what the funds were for, etc. Once we've covered the debt to income ratio, we've gone through your credit scores, we've discussed the assets, and we've come up with a picture of what that looks like. I'm going to wrap all of that up and put it into a piece of software called an automated underwriting system. These systems are universal across the general mortgage lending industry. The really cool thing about getting that automated approval is it means the process from there on out is really just a matter of verifying that the information I entered into the system is accurate. At that point in time, once I've got that automated approval and once I've validated the information that we've entered into that system, I'm going to issue a pre-approval letter that you can rely on. But just as they say in the infomercials, that's not all. Because I feel so strongly that the pre-approval is not just about the letter itself, I'm also going to arm you with some information that will allow you to perform accurate calculations as you go and look at different properties. Now, I want to wrap up this conversation by, to some degree, softening the trashing of the online mortgage pre-approval process that I did earlier. There is no doubt in my mind that there are a lot of people that have had very positive experiences with these companies. And I think that their accuracy ratio is probably pretty high. The question is, given the complexity of the process, do you really want to roll the dice with something so important? If it's a skeezy salesperson that you're trying to avoid, then I strongly recommend you look for a solid referral from somebody that you know. As much as I would love to earn your business by providing you high quality content on my YouTube channel, there are plenty of us out there that approach the job very seriously, that understand we're really not just salespeople, we're educators. It's our job to make sure people understand what their options are. And I'm confident if you do a little bit of digging, you can find some high quality loan officers that can help you. And one more thing, if you do choose to give me a shot to earn your business, if you give me a call, if you shoot me a text at the number below, I'm going to make one promise to you in addition to providing an accurate pre-approval and lots of options and transparent details. Just like those various companies out there promise, if you would like to do your mortgage from your couch, in your underwear, I'm totally okay with that. Thank you so much for taking the time to watch my video today. I look forward to talking to you again soon.